interesting one here I'd like to jump into, because we did see, just new development, new sales in general last year really drop off a cliff. We saw the condo market stall like crazy, and to jump into that, you guys got to remember what we were building in the GTA in terms of condos, like those little shoe boxes that we were, very investor heavy. Um, People don't want those. Families can't use those. Doesn't make sense. We're now cutting our immigration that we had record highs of. So a lot of our non-permanent residents that would be renting, that number is going to start to dwindle. And it's not a great time for investors to be buying into these things as well, for, even just the cost of carrying. So that's why we've seen that stall. And I don't think that it's something that we need to overly, I don't know if I want to say overly be concerned with, except if you're one of those investor clients. But I think if you're a family that's owning a condo, yes, we've seen prices come down, but you and I also looked at the increase in median price for some of those 2 and 3 bedroom units. That market actually did quite well in certain pockets last year because families are still willing to buy those. So again, you got to pull away from what the general statement is about the condo market and look specifically to what matters to you. But anyways, let's jump into this and take us away here, Matt.
Yeah, I mean, first out a shout out to Edge Realty Analytics. This is Ben Rabideau. He does a monthly research paper. If you haven't signed up for it, I highly recommend it. He's got great information. So what we can see here is the condo and the rental boom. These are under construction right now. So this isn't condos and rentals that have already hit the market. A lot of this is still under construction, and we're going to see that come on market this year and next year. And when you look at what's selling on the other side, very weak numbers. The condo market is the market to keep your eye on this year. There's going to be some pain in this market, unfortunately. It's just because we've built so much. We built so many rentals. At the same time, like we've touched on in months before, we're seeing non-permanent residents leave the country in record amounts. If we were to get into a trade war with the US and 25% tariffs were to come on, we're going to see a couple 100,000 people lose their jobs. They're probably going to be non-permanent residents. And, if you're a resident of Canada and you lose your job, you're going to stay, you're still going to live in your house, you're still going to participate in the economy. If you're a non-permanent resident, you get laid off. You have to decide, do I stick around or do I go home? Do I go to another country for a job? That's what I'm keeping my eye on in terms of that. And then you're getting this massive wall of rental properties, one of which we haven't seen in a very, very long time. 2015 till now, we've had such a spike in rental properties under construction, and those are coming online this year with a softening in the rental market, which we'll see in the next chart.
Yeah, we talked about this before. It feels like a little too late. We were talking about the need for those purpose-built rentals. They're finally getting them going, and it's one hand doesn't know what the other one's doing. We're cutting down immigration. We ramped it up, in a big spike, and now we're cutting it out. And I don't know. Well, we'll see how it all pans out as it comes online.